Are you wondering which stocks to buy today to receive some insanely high flow of passive income forever? Well, today you'll discover what are the 2 best Canadian dividend stocks to buy and hold forever to receive the highest dividend income as well as the best potential of growth. To pick those 2 companies, obviously I've started by analyzing what is the business model of the company. So how are they able to generate their income and will it be sustainable over the next 10 years, 20 years and 1000 years? And after obviously I've made a fundamental analysis on each and every single one of these 2 stocks to see if they are really undervalued at the moment. Now, let's see what is my pick number 1. First, let me ask you a question. What is safer than banks? The answer to that is pretty much nothing, since the bank doesn't really have any kind of big risk, except the risk obviously to get robbed or even to go to bankruptcy. But if this would happen, I can guarantee you that this investment in that particular bank would be the last of your problem. It is why today I've decided to present to you what is my favorite and the best Canadian bank in my opinion, which is the Toronto Dominion Bank with the ticker TD.TO. This bank is a member of the Big 5 banks in Canada, which includes other members such as RBC, BNS, CIBC, BMO, and obviously TD. Did you know that this bank at the beginning was actually 2 different banks? On one side you had the Toronto Bank and on the other side you have the Dominion Bank. This is why today we now have the Toronto Dominion Bank. Over time, this bank has expanded the scope of their operations to now have become one of the largest banks in the world, with a current valuation of over $150 million and over $1.7 trillion of assets under management, and with over 25 million customers all around the world and over 2,000 branch locations. This company has generated slightly over $38 billion in revenue in 2021. And as a great bank, this company is generating the biggest part of their revenue from the different services and products offered to their different customers. For example, their credit cards, their loans, their insurance policies, as well as their bank accounts and their investment vehicles like gigs and mutual funds. Right now, it's mainly focusing on the retail banking around Canada and the United States, but TD is also an important provider of the commercial banking services. This is pretty helpful for all the small and big businesses that are looking for line of credits or loans. As you can see, the Toronto Dominion Bank is acting in some really interesting markets in North America, but through time it has been also able to diversify their different operations, with their 3 main sectors being the Canadian commercial and personal banking, the US retail banking, and for the richest, the wealth management and insurance. As you can understand, people even throughout the next decades and the next years, even throughout recession times, they will still have a massive need for banks. It can be to help them to finance their different future projects or to help them to plan for their retirement. And on that side, and for the small businesses, we can see that TD is a massive leader in that field for North America. And despite their loss of valuation of about 10% since the beginning of the year, you can see that over the last 4 quarters in 2022, they have been able to beat the predictions of the analysts for their earnings each and every single time. Plus, they have recently announced that they were increasing the dividends, which is a pretty good news for the different shareholders. But now, let's see what the valuation measures are telling about this company. First, as you can see, this company currently worth a giant $163 billion at the moment, with a super low price to earning ratio of only about 9.49, which is quite lower compared to the average of the financial industry, meaning that on that side, this stock would be currently undervalued. TD also has some excellent profit and operating margin, as well as a great return on equity of about 16.50% over the last 12 months. Over that same period, we can see that they have generated over $47 billion of revenue, and in the last quarter of 2022, we can see that they have been able to increase their revenue of about 35% compared to the same period last year. And at the same time, they have been able to increase their earnings of about 76%. An interesting fact about this company is that they have currently over $500 billion of cash compared to only about $386 billion of debt. And we can also see that on the 5-year period, the risk represented by the beta is slightly lower compared to the average market. As you can see by their beta of only about 0.84. And on the last year, so on the 52-week period, we can see that they have fluctuate of only about less 5% compared to about less 15% for the average market. And as a great dividend company, we can see that they are offering a great 4.24% of dividend, and they have a super low payout ratio of only about 37%, which is a great news for the investors that are looking for a dividend that is sustainable on the long term. And over the last 3 years, we can see that they have been able to slightly increase their total revenue, which has led to a general increase in their net income. However, we can see a massive diminution of their cash flow from operating activities, which has led them in a diminution in their free cash flow. For the second stock that I've put on my list for the best Canadian dividend stocks to buy and hold forever, I've went with another company which is acting in another essential service in Canada, which is the telecommunications sector in Canada, with the company TELUS with the ticker T.TO. What is pretty interesting about this kind of company at the moment is that it is currently acting in a sector that is pretty much a triopoly in Canada. It basically means that the telecommunications sector in Canada is controlled by 3 main companies, which are Bell, Rogers, and TELUS. TELUS, compared to the big banks, is a pretty new company that has seen the day in 1990, but over the last 3 decades, it has seen some massive growth with over 60,000 employees and over 10 million of customers all around the country. TELUS is offering numerous services and products, notably some internet access, as well as some entertainment, healthcare, and obviously a vast majority of cell phones and television plans. And all of those services and products have helped them to generate over $13 billion of revenue in 2021. Add to this, TELUS has been recognized as having the best LTE network in Canada, as well as the best combination of network coverage and performance among all the different competitors. Unfortunately, a great problem with the general telecommunication sector in Canada is the lack of great customer service. The customer service for this kind of company in Canada could often be compared with a big maze that you need to go through and step by step be able to wait multiple hours before to find the final answer. But good news about TELUS is that it is currently ranking as the first among the 3 big companies in Canada in that sector as being the one with the better customer satisfaction. Unfortunately for this company and for the different investors, we can see that since the beginning of the year, for all their different earnings, they haven't really been able to massively beat what were the prediction of the analysts. This was obviously mainly due to all the different macroeconomic events that are happening on the market, but also to the fact that this company has need to deploy a lot of money to be able to invest for the 5G network all around the Canada. But we can see that overall, since the beginning of the year, TELUS has been able to resist better compared to the average market performance. And a good news, just like TD, they have recently announced that they were increasing their dividends for the next year. As you can see, this company also has a great sustainable business model on the long term, because as long as we will need to be able to communicate with each other from distance, well, we will still have a need on that side. And with the market percentage that it owns in Canada in terms of the telecommunication market, TELUS is definitely a company that you should keep an eye on for the next couple of years, especially with the 5G network deployment over the next couple of years. But now, let's see if it is worth your money at the moment. At the moment, TELUS is currently worth about $40 billion with a pretty fair price to earning ratio of about 19, which is pretty much on the average of the telecom sector. This company currently has some great profit and operating margin, as well as a great return on equity of about 12% over the last 12 months. Over that same period, we can see that this company has generated over $17 billion of revenue, with an increase of about 9% during their last quarter of 2022 compared to the same quarter in 2021, and a massive increase of about 49% in terms of their quarterly earnings. Unfortunately, we can see that this company has only about $1.46 billion of cash compared to a massive $25 billion of debt. However, in terms of the risk of this company represented by the beta on a 5 years period, just like TD, they have some super low risk of only about 0.59 compared to the average market. And over the last 52 weeks, we can see that this company has also lost only about 4% compared to about 15% for the market. And as being a great dividend business, we can see that TD is offering about 5% of dividend per year. Unfortunately, the little problem that could happen in the near future is the high payout ratio of about 90%, which means that this dividend might need to be cut eventually, especially if we surpass the point of 100% for their payout ratio. And over the last 3 years, we can see that they have been able to increase their total revenue, which has led them to be able to increase their net income over the last 2 years. And despite being able to increase their cash flow from operating activities, we see that their cash flow from their investing activities has been massively diminishing over that same period, which has led them to receive some decrease in their free cash flow over that same period, with some negative free cash flow over the last 2 years. As you've been able to see in this video, it is possible for you to buy and hold forever different companies that give you some great dividend income. Unfortunately, there will always be a certain risk to invest on the stock market, but as I share with you today, there are different sectors of the economy that will still be there over the next couple of decades, because we will obviously keep having a needs for those kind of sectors. And this strategy to invest in different dividend stocks could be a great strategy for you to increase your net worth. But if you want to discover what should be your net worth depending on your age, well, check out the video that's gonna be right over here. And if you like personal finance, make sure to join the North Investor by subscribing to the channel for only $0.0, and I will see you soon. Peace!